everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, we're taking a look at the crude oil futures. Now, crude oil as a whole was mostly kind of range-bound with a slight bear tone to it for most of the morning until right after 8 o'clock. Right after 8 o'clock, we had a huge burst to the upside, and whenever something like that happens, totally outside of what's been happening for the rest of the day, a lot of traders will just straight jump in. That's why I have an arrow right there, because it's a complete detachment from everything else that's happening. The market is quickly shifted from a range to a breakout mode. And when things go into breakout mode, that's when things start getting aggressive. So there will be aggressive buyers that see that pop higher that big. It's the biggest bull candle they've had all day. That's probably the biggest candle they've had all day. That is telling you something. Buyers will buy into that, assuming it's going to continue to the upside. Now, after it follows through a little bit, then you start having the conservative buyers stepping up, right? You've got the big aggressive buyers jumping in on that huge bull bar. They see really good follow through. We're breaking above the prior swing high. We come back to the swing high. The sellers can't break underneath it. Big clues again. And buyers will begin aggressively buying into it, knowing that we're getting a pullback in a very strong up move. And the anticipation is that you get a second leg to the move on the way up. In this case, it lasted a little while, probably because it was stuck around the ETH gap, but once it got away from that gap area, it very quickly moved up towards the highs to complete those objectives for the buyers. Now, as we continue higher, we see the same thing again. This big burst higher. Look back here, right? Notice a repeating pattern. We break above the highs. We hold those prior tests. We're getting the exact same thing over and over and over again. We broke above the highs, pulled back, use it as support. We broke above the highs. Now the buyers have a pattern to work with. We pull back, and we buy back up again. A nice little buying opportunity there. We push back up towards the highs, and this time around, we dip underneath it. We get a trap below that prior swing low, meaning that all of the buyers who maybe bought in down here, they're trying to trail their stops up along with this move because they don't want to give anything back, right? It feels good to trail your stop. But when you're a little bit too aggressive, all that ends up happening is you get stopped out of the move when it's not done yet. Right? So we have a huge stop out getting traders that were in the move, getting them out, right? So they're trapped out of the move, and we get a huge bull rejection. And what does that show us? Likely, a lot of big buyers think, Goldman Sachs and some of the bigger names, they knew exactly what was going to happen here, and a lot of traders are going to get nervous and move their stop up too soon, and they likely had a lot of big buy orders waiting there, stacked up to absorb those stops, and it slapped the market right back up to a huge bull candle closing on its highs, and that is another buying opportunity. Even if you got whipped out of this one, underneath that swing low, that allows you to jump right back in again and get it all back. Now, after that rally up, what do we have? Well, we have a possible 3-push wedge top, little bit of exhaustion up here, right? We're running out of room to the upside without any pullback. We need to start getting some pullback before the buyers get too aggressive anymore. They're going to be a little more hesitant to buy too close to the top. Every time that they bought close to the top before, we were in breakout mode, right? It makes sense to buy close to the top because you're breaking out. But now things are starting to wind down a little bit. Doesn't mean that it can't go higher, but we're running out of a little bit of that steam. We need a deeper pullback to get buyers more interested. Now that could be below the moving average. Heck, it could just be a test of the moving average. But at this point, that's kind of the idea, is that we need to see a little bit more, and that's why we are out of arrows. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit useful and entertaining, and we'll see you next time.